Yo, what's up, guys? Today, guys, we're going to talk about price action of yesterday, 9th of June. We couldn't trade, I had exams, so I could not trade. But let's talk about a little bit of price action and how it went, really. So, pre market open, we had, let me just clear this up. So on Nasdaq, we have pre-market open. We have these lows, 4-hour lows, and these 4-hour highs. These hourly highs are not even 4-hour highs, because these 4-hour highs I can show you, were taken out. So we are not marking them out. On the 1 hour on Nasdaq, we have these hourly lows. We have these hourly lows. We have these hourly highs, but they have been swept pre-market, so we do not care about that. We have these hourly highs. They got swept, so we do not care about that. We have these hourly highs as well. But they got swept as well in the same move, and we have these early highs on the upside right here. On the S&P 500, what we had was a little bit better for me. So we had these 4-hour lows, we have these 4-hour highs, so move down and move up, move up and move down, that's a high, move up and move down, that's a high, and move up and move down on the hourly, that's a high as well. So we have these relative equal highs, hourly highs, which are very strong draw on liquidity. Not only that, in the Nasdaq we swept those highs, and in the S&P 500 we didn't. So basically here we have a very strong relative equal highs, and right here we didn't have those because they've been swept before. So creating as well a bearish S&T, which gave us a reaction to the downside, and it really was just our strategy, simple. So yeah, we have the S&T as well. We have these strong draws on liquidity. So I wanted to take a trade on the Nasdaq because of these relative equal highs. Market opens, we go to the downside, sweep out these lows. Then we have a break of structure, not a break of structure, but we have a reaction to the upside. Then price moves lower. We go to the 1 minute. We actually took this trade on 1 minute. But it's really fucking simple. We wait, we get a break of structure right here, boom, to the upside. Then what we're waiting for? Continuation confluence. What we get? Nothing. We wait. Our macro opens. What price is feeling? Price is feeling 5 minutes equilibrium. We wait for a break of structure, either a break of structure or a reversal gap out of that. We get both right here. I can show you. Get both on this candle. So break of structure. Right here, move up and move down. Move up and move down, exactly. That's a high. Break of structure, reversal gap. Enter on that. Stop loss a little bit above these lows, so a little bit above here. That's where we want to be. And then take profit on these early highs and the early highs. So 2.31 risk reward ratio, very safe trade, very good trade. I'll take profits. Could have been probably tighter on the stop loss, but hey, if you are a little bit tighter, you can get really stopped out because price was just moving up or waiting for a reaction or something. Maybe this was my trade. I wanted to take, I couldn't take it because I was in exam, but really price action was really good. It was just applying the strategy. Bias was very strong to the upside, these relative equal highs, and on the Nasdaq, price actually moved way better, much cleaner. We got inverse value gap right here. I can show you guys 5-minute inverse value gap. 5-minute inverse value gap right here. Price comes back to equilibrium. Let me fill it in for you. Market is already open, so I need to. Price fills equilibrium. Also fills this order block. It doesn't fill the breaker block, but it fills the equilibrium and order block. Go to 1 minute. It's really fucking simple. It was much better trade because price just moved in the Talkie targets. But I wanted to take the trade on the S&P 500 because of those relative equal highs. But if I was live trading this, I'll probably take on Nasdaq because Nasdaq was looking better for the trade. Where is it? Right here, retracement. We wait for a reversal gap or break of structure. We get no. Wait for break of structure. Right here, we don't get it. Right here, we don't get it. Move up and move down, that's a high. We don't get it. Move up and move down, that's a high. We get break of structure right here. Place to buy. Stop loss, maybe below these lows, wherever you want. Take profit. I'll wait these eyes. Not the best risk reward ratio, but hey, if we are a little bit tighter on stop loss right here, much better. If we are much tighter like this, much better. So yeah, nice trade. And if you're more aggressive on the entry, if you entered just out of reaction, it would have been much better. Stop reward ratio. Let me just show you guys. Fuck. Right here, and then all the way up to these eyes. If we were only taking the trade out of the reaction and not waiting for a break of structure and reversal gap, and that's probably what we will trade because of the entry or there's a little inverse value gap or something, but you know, yeah, for me this was the trade to take. You know, 3.16 receiver ratio, very good price action lately, and yeah, that's basically it. You know, very short trade recap, and yeah, today there will be 2 trade recaps, this one and then the trade of today, which I'll see if I take a trade or not. But yeah, keep updated you guys on YouTube. So yeah, guys, see you soon and see you next video.